Hello, good evening, everyone. Welcome. Thank you for joining in on today's live. And I'll be sharing with you a very simple model to which you can trade a continuation of price on the chart. This is the day two of the 30-day backtest challenge I am holding to help myself and struggling traders who would like to create an edge from analyzing the charts. All right, so what I'll be sharing today is something that not needed to have any complexities in your understanding because the series in general is aimed to literally walk us through price action, not to dictate what price is about to do, not to feel like we are masters of this market, but only to um, humble ourselves as students of the market to pick, learn, and take note of price action so that we may better how we approach the market, the charts, and all of it. So, very well. One next thing to note is that this is a backtest session, and a backtest session is not necessarily showing you current ongoing price action, but it is showing you previous price action, and that is why we are here to study previous price action to be able to help us, generate a working model that we can use in upcoming or incoming market situations to help us know our stance against the market. All right. So I believe you can see my screen at this point. Um, if you can see my screen, kindly let me know. Now, on this price action, we are trying to see why there was a continuation move back into this specific region, and also why even after price had gone far away from it, price still came back and picked it. So now, and we're also going to be noting how or what series of actions price gave us in this delivery. So very well, this is something I have previously studied, so I'll be sharing with you what was studied. Please do well to take notes and not just take notes. Um, have it be that yes, you also within yourself practice some of the things you hear from this live session in your own personal chatting moment to be able to help you also understand why some of these things I say are said, so that it's not like, oh, divine people is saying what is not on the chart, or no, the information and everything I'm saying is still here. We are basically just noting it out and taking note of it. So now we want to say or believe we are approaching this price at a very different time. One, here is where my area of focus is, this point of reversal. But now I also see that during my study, I also see that yes, price had some level of respect around this point, which also aids the talk about which also aids the talk about sorry, which also aids about the whole trend continuation technique that we'll be walking through. So first things first, let's clear off this whole um, current data that we are working with and see what we can take notes from price action. All right, so very well. This had been a pretty much um, ranging market for Bitcoin because we can see price going up to highs, creating lows. Sincere apologies for the break in transmission. I really don't know why um, I had that break. So, but please, I come if you can hear me so that I proceed. I'd have to walk back a bit too. to what I had said earlier on. So, but please kindly let me know. All right, all right. So now back to what we were saying. I can see a couple of other persons joining in. Thank you for joining in, and let's do well to make the most of our time here. Back to what I was sharing. Now, on yesterday's live, we could see that at this last lap of price movement to the upside, we should also pay attention to the price action that happens here. So now, some people might go as high as taking note of every price break moved or every price move over here. That may be nice, but recently, one thing I came to or I had to come to terms with was the fact that most times, sorry, please, I think it's better now. All right. One thing I had to come to terms with was the fact that most times traders try to overcomplicate this thing, and really, it shouldn't be overcomplicated because if you overcomplicate it, it makes it harder for you to see it over and over and over again. So I think in essence, what I'm saying is keep it simple and don't try to like twist your um, perspective towards the chart. The market will do anything what it wants to do, regardless of your lines, your levels, your diagrams, or whatever architectural structures you put out on your chart. So, with that regard, or in that regard, please um, try to see things. It will help you master at least one bit, one model, one particular style before you now want to spread your wings and do more things. So now, basically, I'm still just going to note price action that went down here, which was okay. This is the mini structural points that we had on this um, leg to the upside. And really, I might not pay attention to this. You understand? I'm sorry, my chart is messy. We are just trying to study and figure things out. This is like a rough worksheet. Yes. So now, I started noticing that paying attention to this leg is something that shouldn't be um, overlooked in this or in this using this model of trading, which involves you know during an uptrend where price is showing signs of reversal and also how you can jump in on the continuation. If you want to take your trades on the right hand side, you should not uh, take out or forget what's happening on the left hand side. So now, on this mini structural move here, we can see that um, yes, price has broken this point. Price has broken this point also. You get so, but in reality, yeah, price has broken this point. Sorry, I didn't know my screen settings changed. Please, is the view on the screen better? I want to change the layout I am using. Oh, it's better now. That means I have touched it again. Sorry, please. Let's get this set as we proceed. All right. I think it's better now. All right. So back to what we were sharing. Now, I was talking about respecting this most recent leg of price action because really in my current study of price either reacts to the point below the most recent higher low that was broken or the point topmost of it. That's where price would react to. So now, or first candle in front of your screen. No. But really, like the discounted levels, because if we understand trading, we should know that there are premium and discount levels. Uh, and if you don't, it's a simple phenomenon where from your range of area, from the range or area you are looking at taking price or taking trades from, you should try ensuring that there is an a tapping, sorry, into the discount level, and there is a tap out towards the premium levels. And I might just share that, but maybe across or over and across the series, we would still share more light on that. Now, so now, um, taking note of this minimal price action here, we can see that finally price has broken below this most recent low. So now we have it in our mind that, oh, most likely there is a trap that has gone on with the buyers over here, and price is most likely looking to tap back into any of these regions and drop to the downside. So now, if we zoom into this price action here, why is this thing looking like this? There is this concept in trading that this diagram is looking like, oh God, I'm not familiar with that concept. I think it starts with the W, but I don't know if I'm trying to figure out another theory. Well, but now, taking note of this most recent move here, you can see price breaking towards breaking below this point and scrolling down to the 1 hour time frame. Scrolling down to the 1 hour time frame, here we can see a very big fat fair value gap area of imbalance that was created at that spot first. So now we are trying to like read price movement or read price action, and basically we want to see something which was the money transfer from this high into this region. So now price had broken below this point with a fair value gap, and it's not really just oh because uh, price presented a fair value gap, you think a money transfer had happened. No, what I'm seeing here is that okay, the fair value gap thing is coming as An added arm of why price is reacting that way. An added arm of why price is reacting that way. So verily, it has to come from a point where there had been a grab of liquidity. And also you are seeing that at the center spot where this low was broken, we had a fair value gap there. So if we refine this 4 hour fair value gap, it gives us something like this. And this leads up to where price, reacted from on this fall to the downside. Now, having it be that price had come back into this point, there has been a mitigation, a money transfer here. So now, this was something that we shed light on yesterday, which was the realization that oftentimes price moves or shifts where the liquidity is based. That's just the truth of this whole thing. Price moves or shifts where the liquidity is based. But you just have to be able to see those price moves and price movements as they come or as they happen. Now, this is one of the reasons why we are noticing this point here to be a valid point for price to return or continue this leg of the downside from. Why? Because yes, it has grabbed liquidity off this little high here, and not only did it grab liquidity, it also tapped into another solid liquidity that, if we can remember, is really what broke this whole left hand side uptrend that we had experienced or we had been experiencing. So now we are going to now shift our focus into this point. But nonetheless, I am not going to lie. I would pick somewhere around here. I would have picked somewhere around here, probably this sweet other block here, to stand as an entry for me also. If I am looking to take multiple entries on this again. So, but one thing is now seeing that, oh, this leg now wasn't what where broke this recent price action that we took note of. So the recent price action we took note of was broken by this point. So really, this is another thing to note. This is one way to have an entry, and I would now say, oh, I will correct myself and have it be that one of the things I'm noting is that this could also be another possible place where price would have reacted from, courtesy of the fact that it was the other block that led to the break of this um, mini structure to the downside. Now that we have detailed out the whole money transfer thing, is something um, most traders do not understand, because I myself, it took me, I think, 3 years to even come across any study, any guide that talked about money transfer for me as a trader. So it's something that I'm not saying um, big English or too many grammar is a concept that I was privileged to see. I think through Alpha Forex, yes, I got that concept through him. Now, take note of this. We can see. Let's go back to the higher time frame and see. So now, one thing we also made mention of yesterday was taking note of certain abnormalities in price. Certain abnormalities in price can, oftentimes mean something. Yes, can oftentimes mean something. But really, it's a hard thing to know which is depicting what. So very well. At the end of this series, I will be compiling all of the previous structural points and reasons why price acted on every price display or every price action that we are drilling per day. And at the end of the series, I would compile that into a do I call it a compendium or something that would serve as a backing for this data of ours so that you can flip through it and reverse whilst you're trading or analyzing the charts to know what reasons or to back up your analysis to know that, oh, if I see this, I should expect this most likely, or until I see this before I should expect this most likely. So now we've been taking note of the need for price to vividly clear out structures. We now saw this um, irregular order block over here, and that's something that would have taken attention also because it was where led up to this point. And needless to try to sugarcoat these things because I am a trader and we all get greedy sometimes or we all get too smart. So now this little other block here would have also been somewhere of which I have had interest. And if care is not taken, I think I took this um, trade from this point and I took a loss at then. I can't really fathom it. I took a loss at then and I took a missed entry on this particular section that we will be drilling into. So sometimes the thing is as traders, oh my god, as traders, we should understand that sometimes the trades you take or the trades you miss will be the ones that do well. The ones you take will be the ones that hit you in losses. So, but that's why you need to also work on your risk management to ensure that you are firm regardless of what the result or outcome is, and you are sticking thin and through with your um, rules as a trader. So now, sharing this back, I made mention of the fact that I took a loss on this point, and really, I think that was what made me see this. Yes, that was what made me see this as at then. So losses are lessons. Yeah, losses are lessons. That's a phenomenon I have been quite well accustomed to over and across my time of delivery over here. So now we can see that inside of that other block that looks very irregular, it's a very, very calm, sweet looking other block. Inside that you have another event inside. So this is a much more reasonable display to show that yes, really, price tapped into this point and left print where it will come back. And this was something I didn't understand previously because my view was myopic towards this point. So, but after taking that loss, my eye opened a bit, and really, this is something that has helped me in my little time of coming back to the chat, and I'm also sharing that so that it is noted with you. Now, let's get into this entry drill. We've done a lot as regards understanding certain factors and reasons as to why price would have, reacted the way it reacted and all of those kind of things. Now, we're going to move on to a lesser time frame. Now, on the 15 minutes, let's see. and still note or take note of any price action. All right, yes, we can see that on the 15-minute time frame, this and we can see really how price, you know, broke this point and took out liquidity. So now back to what I said about taking cognizance of where price should come back into. If it's coming back into somewhere like this, it's fine. After the move, if it's coming back into somewhere like this, it's fine because this is serving as a breaker point or a breaker block. But let's validate what we are saying. We're not here to speak English. So, but courtesy of what I said about price coming back to premium levels, we really could see that yes, this was where price came back into to take the fall to the downside. So, increasing your chances of reducing the losses you might take anyhow is understanding that factor because trading is 80% waiting and 20% trading. So, even in that your trading, you should also know when to wait for price to actually yield open before you dive head deep. And one of those could be just chilling to see price come back to very higher price or very solid levels to increase your um, probability stance on it. So now we can see this other block here. We can see this other block here, and we're going to take note of it. And also, remember, we are not just because we see any other block. This is something that we have figured out an origin of where or how price was moving from the break of the previous structure to the mitigation and money transfer that had occurred. So these other ones are just to help us in um, affirming where the entries should or would come from. Scrolling down to the 5 minute time frame to still see if we can take note of more price action. And really, okay, we can see that yes, this point that was the highest point had been mitigated. Yes, it had been mitigated. So that talk of mitigation, if you were here yesterday, I said something about, or if you listen to that recording, I said something about that. That price taking money from this point and presenting it to this point is something that we should not omit because this is like patterns. These are like patterns that price are taking to come back to after its whole shenanigan, which may take out a couple of people and all of that. Oops, sorry. So now, really, we don't want to complicate too much, but yes, we've seen that price had tapped into this point, and unfortunately, I was looking to see if I could get a refined, maybe other block or entry criteria over here, but there wasn't any, which was the reason why I tagged this one of the simplest ways to understand a trend continuation move, because now if we go back to the 1 hour time frame, we don't need to stress. We'll simply see this other block that price had created over here that has simply grabbed liquidity from here, tapped into the money transfer from here, and broken structure to the downside as our entry point. And really, price respected that point as we are about to see. But please, if you are just joining, kindly, or if you stayed up until this time, please subscribe to this live, to this YouTube channel, and keep up with the live, and do well to take up on properly studying, observing, and taking note of what we are sharing over here. So now for me, um, I like to keep my risk percentage a little below 5% max. But the highest I think I can use if I am, conservatively trading. Emphasis on conservatively trading, because there are times when you want to just, Lambo or wrecked. Yes, they happen. Sometimes you just want to, rush it. But really, there should be that conservativeness most of the time if you are a trader, because really you should treat trading like a business. You should not want to gamble. It's gamblers that will put in all their stake and get bumped at the end of that day, or at the end of that particular um, game. So now I try to use a little above, 0.1, 0.2, 0.3, or zero point 0.4 at the most. And if need be, if the entry I couldn't get any uh, refinement, 0.5, because I trade with futures leverage. And when you use 0.5, if you are trading with a 10x leverage, that's simply using 5% of your account to trade. So we don't want to be, overexposing ourselves. So, but now I can also see that from the 1 hour time frame, this is just a 0.3 move. And even if we're not going to like want too much and say we just want to tap into the sell until price comes into here, we're already seeing a 17-hour trade, which is something that most traders never get to see. Most traders never get to see, and this is it. You understand? So now for me, I will be taking note of everything that was a reason or a part of this build up price display over here. But one more thing is, I love refinements, and I'd always say that refinements come at its own cost when you are trading, because you might miss some trades because you refined your entry. Your stop loss might be taken out because you refined an entry. So take it from somebody that likes refining a bit. It hurts, but most times, for me, I don't know. I do not like to overexpose myself to insane risk levels on the chart. So that's one of the reasons I key into refinement. What I'm talking about it is that this same point where we're able to get this price delivery from, price came back to it after, I think, about a month, and dropped down to the downside, or respected it again after like a month. And even now, respecting the more refined entry. And sorry, please. All right, so I think price is still in motion. Oops, I have fast tracked this price delivery. All right. Now, no, I don't want to exit. There you go. This should take me back. Come in place. All right. So this was what I was talking about, where price came back to re-engage on that level previously that we had marked out. But now, would you prefer waiting on price to? I'll share what I'm explaining now. Would you be in support of price to, you know, just because you want to refine your entry, wait for price to stay more time before taking you in on a trade? I really don't think so. So even as an advocate for, or as someone that takes refining serious, I know it's bad, I know it's hot, but um while or if you are doing, if you're trading um and working with refined entries, you should also get ready for the bond that comes with it. And now, but the good thing is, don't worry, it's going to give you very, 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 very better coverage as regards the risk you are exposing yourself to as a trader. So now, this is it on the 15-minute time frame. That's the other block on the 15-minute time frame that's refined. On this 5 minutes, it's giving us this. This is also another block. I learned this, I think, from liquidity providers concept. He called this MBB, that's multiple breaker block, simply another block that is engulfed by two or three more opposite candles. So, but then it's going to increase the risk. You understand? And we're trying to reduce it. So, it's often better that we reduce risk. So now this is another thing to note, that because your entry on, because you see or you move down to a lower time frame doesn't mean you get a more refined entry. That's one other thing I'm taking note of. And really, yes, after much patience and chill for price to act, let's see, or actually stamp that yes, price did respect this point that we um, talked about. Oops, sorry, my chart is looking messy. Like I said, it's my current rough sheet of price study. So when you're solving maths, trading itself is harder than maths. So when you're solving maths, you need your rough sheet. So let's see price reaction to this point. Um, when the notes are out very well, some of this information will be detailed and will be quite more or quite well understandable, to us. All right, so please permission to um, drag this back. Yeah, you can see that, oh, we had a reduced risk exposure by just 0.1%. And yes, price came back to respect that point over here. Price came back to, yeah, respect that point over here. But this is not a phenomenon that I should advise simply because how would you want to, just because of a zero point 0.1 reduction in the risk you are exposing yourself into in an industry that's risk entailed in its whole entirety? How would you now, because of that small portion of risk, now miss out on this whole thing? That's why most times, at certain times, refinement might not just be needed. This is why we are looking at keeping this simple, or we tagged today's session keeping it simple, in getting a continuation entry using this simple model. So very well, I believe this is something that most of us um, maybe might have learned previously, but if you haven't and you're just learning this, please do well to try it out and let me know what you think. A comment, hello Divine. I tried this model you shared, and after back testing it, it's now working, or it's now my favorite model of trading. Will be very, very much appreciated. And if you're looking to understand more the complexities of trading to make it simple for you, and get better at your grind across the crypto, blockchain, and Web3 industry, whatever niche you pick, kindly do not stay far away from this channel. Do not stay far away from Divine Crypto, because with over 5 years of experience, I am bringing the hits down to all of these platforms and profiles. So just the way you found me, thank you for staying through up until this time in today's live. Um, we will be looking to republish the notes and certain other video clips of this backtest series across my right personal socials and um, in-house trading community. Um, if you are looking to get with a group of enthusiastic traders and skilled analysts, market um, traders, and guides, please do not hesitate to join the community. The link will be dropped off in the caption or the description or the comment section. So please, thank you. This is the bits I have to share for us today. See you tomorrow, 9 p.m. Thank you very much for your time.